snapshot a little bit higher at the macro level from the industry perspective, this year's been a real turnaround for security tokens. I think a combination of, a few things. One is the meltdown in cryptocurrency space over the last 12 months in terms of all of the fraud, the fallout, the scams, the huge amounts of money, the huge push from regulators to try to get around this. And also in parallel, the maturation of understanding and knowledge around security tokens and financial companies looking at tokenization as real world assets of security tokens as a really important innovation and something that they are starting to invest into. So in the last month, we've spoken to BlackRock and JP Morgan and Credit Suisse and Citibank, and well, not so much Citibank, but the first three have all built their own token issuance platforms. Now, that's positive. It doesn't really affect us or our community yet because it's a private chain. It's bank assets for bank investors. But the fact that they're doing it is extremely positive because they've realized that this will be how all assets, shares and assets are issued. And whether it's private chain or public protocols, tokens, security tokens are going to replace paper shares. Now, that's really promising. What that means when you have the highest, the tallest, biggest companies in the space, in the industry, in terms of the financial markets, moving on it, talking about it, blogging on it. Then you have then the mid-size and the smaller groups moving in as well. I did post something on the chat group here, which I'll put again, which I think is really important for our project and our community. And this was the recent institutional DeFi finance report from JP Morgan and DBS, which is the biggest bank in Singapore. It's the first bank in the world to launch a cryptocurrency exchange of their own. There are more coming, but they were one of the first. And the key area, or the simplest, the only thing you really need to do to begin is just to read the forward of the document. I'll put it back into the group channel for everyone who hasn't seen it yet. But to summarize, it talks about the concept of DeFi solutions, and I'll read it out word for word. DeFi protocols. Such protocols has emerged rapidly, capturing billions of dollars in the crypto asset industry. But financial institutions need to address a number of considerations as they look at DeFi protocols at scale. We believe a version of DeFi called institutional DeFi, which combines the innovations of DeFi protocols with the safeguard of today's finance industry, i.e. security tokens and securities, has the potential for growth and transformative impact. And then this paper explains what industry participants need to do to achieve regular clarity, drive commercial adoption, and get the greatest benefits out of institutional DeFi for the clients themselves. So that's pumping. That's music to our ears. It's the biggest groups, some of the biggest groups in the space, basically talking, and actually they go further in the paper and actually talk about tokenization. They talk about projects that the Singapore government's doing with a whole bunch of banks. I think there's even mention of the AMM model. And it's a bit frustrating that they didn't mention us, but we were the first in the world, and we're door knocking on all of the people who are involved in that paper and that report. And I've already just started discussions. We have had people like those groups ask us to white label the technology at IXSwap, which is something that we might consider doing. It's not the focus for us today because that would mean it would be private pools for, again, bank assets, security tokens, liquidity pools inside the bank, bank investors, et cetera, et cetera. So it doesn't really do much for all of us. But from a commercial standpoint, that's something that we're considering to the future. But that aside, the important part is that the market in general has woken up to tokenization and the benefits, and now a lot of people are starting to move into space. So that's fantastic. To see the leading financial institutions talking about the AMM models that should come from crypto into the security token space, basically, and then sitting here saying we've already built the first one is validation. I mean, it also shows we're very early, but it's also validation. These people come behind us. So that's good. That's promising. I think updates on the platform side, and I'll let Aaron give up a few as well. But we do have the next security token platform integrating with IXS. So that's something that's been being worked on. That on top of that, as everybody knows, well, not everybody, but a lot of the people in the group that has been following the project knows that we've been pushing really hard for our own licensing. We're pushing hard for retail investor access, so anyone can access liquidity pools as easy as crypto. Yes, they'll have to do KYC AML, but that's how it works. If you want to buy someone's asset or invest in a share or a fund, it's illegal for companies and funds to issue shares to people if they don't know who they are. So I think the KYC element of that is just that it is what it is, and it's actually become very normal through most of the crypto space, especially the centralized crypto exchanges and anyone who's got a license around that. So I am reminded that we were going to talk about an educational kind of focus on this this AMA. And so I guess maybe a few other things I can talk about that are important for the community and where this is going right now. Some recent news, I think, was that Korea has actually clarified their security token rules. We're looking at that already. We have phone calls going on right now with some of the leading blockchain advisories up in Korea. And we've seen Korean conglomerates and banks investing in platforms sort of around the world. We've started to speak to some as well. It's important because, crypto and ICO back in 2017, Korea was one of the biggest markets. And then it became basically illegal and everything kind of went underground and all the hype was sucked out of the market. And there was the issues around ICOs and STOs and all this kind of stuff. So Korea is basically essentially back open and on. So there's something to really be really positive, at least sort of in the Asian market. It was Japan the year before that. And also, I think at the end of Q4 last year, Hong Kong, which dropped its mask mandate today, so the 956 days they've been making people wear masks outside, which is just crazy, but they've tried to build Hong Kong back up. So they're lowering taxes. It's just nothing to do with blockchain, but they've also become much more blockchain friendly and pro blockchain. So it looks like China is making Hong Kong its crypto STO hub, or at least it wants to try to open it up there. It's obviously much smaller, and try to win more business back to Hong Kong. So, overnight, Hong Kong's back open. There's no quarantines. They had 3-week quarantine in hotels even up until a couple of weeks ago, or 1 week, I think it had gone down to. But so Hong Kong's pumping. So if you start thinking about the globe, you've got Japan is on, Korea is on, Hong Kong is now trying to turn itself on. Singapore's been on the whole time. And from an Asian perspective, I think that, that's really promising. Again, recently, and then jumping across to the US, the SEC in the US is having an absolute all-out attack on blockchain, or at least on crypto, calling everything but Bitcoin a security token. They've been saying bits and pieces about this for a long time, and we've mentioned it here on these AMAs before. I don't think it's really positive for crypto to just grab every single token in the world, call it a security token, because I don't think that's actually true. And it certainly puts a lot of confusion is one thing, and it puts the market into a bit of a spin, at least in America. So a lot of people are now looking outside the US. I think back in 2017, 18, ICOs and crypto Asia was really the hub. Don't know too much about Europe, and then it jumped to America for a couple of years, and now it's sort of come back over here, I guess, again, at least from a very high level macro perspective. But essentially, all it's just saying is regulation. We want people who touch crypto, like staking, lending, borrowing. We think you need licenses for that, because that sounds like banking services. If you want to obviously touch security tokens, well, you need to be broker dealers and exchanges. And it's more on the crypto side, what you have to do if you're custodizing or buying and selling the actual assets themselves. It's a huge market. It's super important. It'd be nice if it wasn't so kind of screwed up. You've still got mega giants in there like Coinbase, who we're very close to, operating as a public listed company there, getting their own trouble with the SEC, but soldiering on, and I think they'll be fine kind of over time. And a lot of my friends who are big crypto and blockchain businesses in America are really upset and trying to fight back to kind of what's going on in the market there. But anyway, what does it all mean? It means that everything we're doing, it should be fairly bullish. And that's been kind of the narrative in the last month, probably since we had the last kind of AMA, is that security tokens become tokenization, which is tokenization of real assets, has become more, in brackets, more mainstream, if you will. More companies launching, more companies interested, more proposals going out, more platforms coming to market, and also groups like us and other groups who have spent many years getting licenses and working with licensed partners. More of those infrastructure coming up to the marketplace. But what's interesting as well, I think, thinking about kind of the education angle, is that there are a bunch of security token players in the world who have gone and built on private blockchains. It's an important distinction between the private and the public. For us, we don't really believe in private blockchain. I shouldn't say we don't believe. We believe they exist. So it's not like we don't believe they exist. They exist. We don't think that's the right strategy, I should say, because none of the digital assets that anyone cares about, which is pretty much everything in crypto and ICOs and NFTs and DAOs, they're all issued on public protocols. So if you're issuing on your own private chain, you're disconnected from all those assets. So you're going to miss out on all the value of DeFi. You're going to miss out on being able to buy and sell in digital currencies. So it's just a better ledger, a better database for yourself internally. Whereas on a public chain, you reap the benefits of public protocols, mainly global distribution and interconnectivity and interoperability with other assets. So a lot of the STO platforms around the world have actually gone and built on private chains. I think that's twofold. One is that years ago, there were a lot of maximalists who believed that private chains are the only way that we're going to go with security tokens, because those issuing, must have private chains. Now, PwC put a report out last year that had showed a significant swing to the other side in terms of institutional adoption for public protocol issuances. Because at the beginning, years ago, there were these random ideas floating around. If you issue a security token on Ethereum and there's a miner in North Korea and they're getting gas fees, you're facilitating terrorism, all these crazy ideas. Anyway, so a lot of that's gone, and now it's becoming a lot more obvious. And the younger people that you speak to in all these banks and private equity groups, and even all the leading advisory groups like PwC, KPMG, they've got thousands of people, hundreds of people working in blockchain advisory. Nomura Bank. The smartest people, or the people I think with a better vision, much more aligned with what we're about, which is using the public architecture, but also being agnostic to that. So whether it's today it's Ethereum and Polygon for us at IXSwap, tomorrow it might be Avalanche, the day after it might be Hedera, or they might all be substituted by someone else. I don't think it's going to happen, but what's most important is that investors are getting the asset, they're getting the S in the STO. And the system works. That's what's most important. The system works. It's protocols that are global. The assets that people are buying are decent, and there's some due diligence around that and what they're doing. And then again, if that's the case, then you can actually issue security tokens on broker dealers and exchanges. Those that are plugged into IXSwap can create liquidity pools, and away we go. And we're going to build it out. So the next group that's bringing that we're integrating with has already 8 to 10 STOs, and they're growing. So we're hoping to dramatically increase the number of assets on the platform. For us, we've been waiting for the retail investor access. It's been absolutely key. We didn't want to start more security token pools that were just for accredited investors. And, I think that'll happen. It's just taken a lot longer than everyone had hoped, but we're hard at work solving that. And that's always been the end game. So I think that, like, from a kind of update what's going on in the marketplace, I think there's certainly a lot more discussions going on with STO platforms around the world. The IXSwap wants to be the market maker for all the STO brokers around the world, and exchanges, if it makes sense. And I think we're continue on that path, and a lot of them have said, come back to us when you've got your retail investor access, and then licenses, I should say, and when you can get them or leverage them from someone else. And I think we're getting very close to that, and that'll make it a lot more exciting and interesting this year. So that's kind of major updates for me. I've already been going for about 15 minutes. Aaron, maybe I'll pass it across to you if you wanted to update on those key areas that you've mentioned in the chat there: the registry, the launchpad, the secondary listing, and ambassador program. Aaron, you there? No, you're on mute. Can't hear. All right, let me kick on. Maybe he's having some communication issues. Oh, I think we've lost him already. So yeah, we're relaunching the ambassador program. I'm not responsible directly for that, so I think we'll get some new information out. Gene, one of our boys, and Shah have been planning that out, so we're excited to kind of relaunch that. I'm sure you guys have seen sort of an uptick in marketing activities over the last couple of weeks. I think that's kind of a renewed focus on moving the projects forward, and I think we'll have a lot more to say when we can get to a point of having more product launching on the platform. One of the things we're trying to confirm is the a register for interest page. So we're keen. We believe, I believe, in a world of fundraising for startups that's going to incorporate tokenization. So what's interesting about Web3 startups, blockchain projects, most people think that the only asset that has any value is the platform token. So, and typically VCs are in the seed round or even the pre-seed round. And then they're in the private sale, the big investors. And then occasionally they carve out a small portion for the small investors at the launch, public sale, whatever it's called, whatever they want to call it. But the lion's share of the fundraising comes from the bigger investors, and the best deals go to the bigger investors. They get the lowest token price. They get they might have slightly longer lockups, but they might get it for 5 cents, and the next round's 20 cents, and then the next round's 50 cents, and it goes public and goes up to $5, but these guys got it at 5 cents. Fine. That's been the DNA of token sales only. What's interesting about that as well is that projects typically don't want big holders of tokens, because then they can dump on you. So they try to distribute that, even though the big investors are trying to kind of push the startups around, trying to take as much as possible. The biggest VCs in blockchain are probably the worst offenders around this stuff, even though they wave a flag that they're always there for the project and the founders. But some of the worst offenders are some of the biggest brands in the space. That aside, a lot of these guys have got equity in the protocol or the platform, and that's never shared with the community. That's held pretty predominantly 99% of the time, if not more, just with the VC investors. So it's a fallacy, which I've written about. I actually wrote about this in an Investor X blog, actually, which I post there. It's an absolute fallacy that the only way to invest in a platform is through the platform token, and all the value accrues to the platform token. If that was the case, then why would any VCs want equity in the platform or the protocol? So one of the areas of focus for us is to work with startups in the early stage and offer a tokenized security token alongside the VC investors. I think you're always going to have them there. I think it's fine. I think a lot of them do add value. Some of them don't, but a lot of them do. And they can provide due diligence. They can provide support to the startups. A lot of things that an individual investor couldn't provide. But I think you'll start to see more raises where a portion of that equity is in a security token, because that's going to build a stronger community, and it also allows your platform participants and community to own equity token, STO, and also ICO or NFT or whatever it is that's not the so-called equity. And so the reason I'm bringing that up is because that's something that we're really focused on is when we start to launch security token offerings for everybody, we want we don't want them. We want we want to help a lot of them to be the types of companies that appeal to us and our community. A lot of those are going to be Web3 platforms. We want to try to find founders that want to distribute the ownership, the real ownership of the protocol or company, not just the tokens, to more than just a couple of VCs. And it makes a lot of sense. So if you came up to me and I was launching a startup and I was going to raise money, and you said, I'll give you $1 million from one venture capital firm. I'll just give you an extreme example. Or I can give you 1 million users and they all have a $1 STO each. Like, which one would you choose? And I'd say, well, I'd rather have 1 million users straight away, but that's probably not realistic. It's probably half and half. So the future might look like $500,000 goes to a VC and $500,000 goes to 50,000 community members, but then they're owners of the platform, and they're much more unlikely going to try and dump an STO than they would a crypto coin, because the whole point of equity is to be more long-term focused, and not try to pump and dump like a lot of the token holders are. So the reason I bring that up is because we're building some functions on the platform as we work out the launch pad, how we're going to get the community to help drive the selection of the startups with the sort of registration for interest pages, which also gives the the founders of the startup, I guess, a stronger connection to their community, because again, you're doing STOs with lots more buyers and not just sort of the big guys. So that's kind of key. I think that's really interesting and exciting. And I think that that's something that we're hoping to bring out fairly soon as well. And we appreciate everyone's patience related to the volumes, number of listings. We're still here working dusk till dawn and beyond, and things are starting to come our way this year, after a year or two of really tough times. Aaron, I see you posting some messages. Are you ready to give a bit of a update for the team?
Yeah. Can you hear me? Yeah, so I guess you've gone over the register for interest page already. What we're tying into that as well is the relaunch of the ambassador program. But the way that we are launching it this time is it's going to be very different. Any applicants for the ambassador program are going to be put through a whole bunch of assessment and training before they even come on board. So, and there'll be individual roles for the individual ambassadors as well. And we are adding a special sort of B2B role on top of that. So once these ambassadors have qualified for and they've been trained in the knowledge for STOs and whatever particular role that they're doing, influencer, content creator, B2B relationship sort of person, they will be able to pick up tasks that IXSwap as a company would need to do, right? So for example, if we needed collateral for, say we needed to write an article, what we would do is that if we don't have capacity, we'll put it on the ambassador boards, and the ambassadors can actually go in, complete the task, and actually earn a decent amount of money, especially for the guys that would have completed the B2B sort of assessment side of things. And really, it's really to tie in with the register for interest and the launchpad as well, to start getting the community more involved in how we build the platform and the kind of assets that we want listed on the platform as well. And then on top of that, we are actually in the final stages of the launchpad right now. We're in the last sprint. Once that is done, we are expecting it to get done probably in a month or so. We will be doing a bug bounty program. We understand that there were quite a few bugs the last time we launched the program. We don't want the same thing to happen again. So we're going to be opening up to the community as well to participate in the bug bounty to help us ensure that the launch goes perfectly this time. And then shortly after that bug bounty is done, we'll be launching the IXSwap platform. We have already lined up quite a few STOs. We won't be releasing them at one go. We'll be releasing them over time. Probably looking at one every 2 to 3 weeks to start. And then once demand and traction builds up, we can start adding more STOs. So these STO companies, we're starting to sign off the contracts with them already and starting to structure all these deals for the IXS Launchpad. So quite a lot of activity that's going to be happening in the next 2 months or so in IXSwap.
Yeah. Okay. Very good. So that's kind of the updates from my side. Maybe we can get into the questions.
Got a few questions we can start off from. So what does InvestorX getting their exchange license mean for IX and IXS?
It's very good. Most of the world does not understand that the supermajority of security tokens will trade on listing boards, which are often called OTC boards, over-the-counter boards, which often sit on broker dealers. They're not in an exchange. So an exchange, from my perspective, is an exchange as you'd expect, like Binance, lots of assets, order books, matching engines, place bid, place offers, the things you can do on Binance, right? Because and the tokens on Binance, right? There's thousands of crypto tokens. So what the world doesn't understand yet, but is starting to realize, as to that DeFi report put out last week and other discussions we're having, is that when you think about millions and millions of security tokens, most of them won't ever find a traditional market maker. They're too small, too obscure. There's too many assets. It's probably the real issue. If when we get to a point where every new company and every fund is a security token, then we won't talk about security tokens anymore. We'll just talk about real estate and venture capital and startups again. But for now, because it's all new, we talk about the security token industry. That's just how we've done it. But my point is that the super majority of security tokens will sit on broker dealers, and that's where IXSwap comes into the picture. Initially, that's the original plan. It was like 99.9% of security tokens are going to sit on security token brokers. So let's make a market making model, an AMM model, that allows for any of them to create liquidity pools, et cetera, et cetera. So my point is that exchanges aren't needed. They're not needed today for security tokens. There's not enough assets. There's no traditional market makers because they're trying to understand blockchain. And then crypto market makers are not licensed to market make security tokens in an exchange. Because in a traditional exchange, a normal exchange, pre-blockchain, to be a market maker on those exchanges, you have to have typically have to have a market making license. So the reason I'm explaining this long-winded version is Investor X went and got an exchange license because everything I just said, nobody understood. Everyone thinks it was about exchange license. So the only way we were going to raise more money, because everyone wanted to own a security token exchange. And even if I sat down with people and I explained to them what I just said in even more detailed, they'd still say, yeah, but have you got the license? Have you got an exchange license? So we think the exchange license is very valuable, and we think it's a very important piece of the architecture and the infrastructure, but it's also a long-term game. That being said, we are looking to see, without confusing everyone, if we can get approval for not only IXSwap. Well, IXSwap works to market make the broker dealer side of security tokens, but can it also be the market maker in the exchange? So we'll see how that plays out. Ultimately, it's necessary infrastructure. It's sort of long-term plays. Ironically, we don't need it. I've had discussions with a couple of key people in the industry around the world who both agree with me that the super majority of assets will actually trade on IXSwap and maybe other copycats over time. And the exchange traded volume of security tokens is going to be, much slower build out, eventually pretty big, but again, just a very, very small subset of those tokens. And I think ultimately, the added service, other areas that we'll expand into over time will include lending, borrowing, staking for security tokens, which is not exchange related work, if you will, and something that we're kind of excited to be exploring as this industry kind of grows out. So to sum it all up, it's good, very good. We've got the exchange license, brings huge credibility. We're raising new money now as well, speaking to some of the biggest institutions in the world. Again, everyone still thinks about an exchange license, so it's good to have it. And who knows? Maybe we can even convince some regulators around the world that IXSwap's market making model, although not the traditional market making model, should be able to help security token exchanges because they don't have any market making solutions. But that's not the number one focus for us because that requires a lot of negotiations.
All right, to the second question. This one is for Aaron. What's the status on the auto compounding pool?
The smart contract is done. It has been done for quite a few months already. we haven't decided when we want to actually push that out, whether it comes to the launchpad or release with some of the other products. But what we definitely are looking at right now is earn products to put into the platform. So things like your USDC earn, XSGD earn, to earn at least 5 to 10%, some sort of yield on stable coins at the moment for our users. But in terms of the IXS staking, we have not made any final decisions when to release that.
Got it, got it. And then, are there any plans to have a pool of assets-backed tokens and securities, much like a mutual fund?
Yeah, that would just be an STO, right? A type of STO. Mutual funds specifically, probably not at this point. And there are quite a few issues with mutual funds being brought on chain. And a large issue of that is really the fund admin and valuation partners. So in the traditional finance world, when you subscribe to a mutual fund, the fund or the fund admin updates their net asset value on a daily, monthly, whatever the frequency is. Whereas if you put it on chain, the problem is right now that there are no oracles that actually are feeding any of the NAV prices from the fund, these mutual funds. And they're not able to port a lot of the information on chain to an off chain process, and the fund admins are a little bit slow to catch up. So that's one of the issues that we are facing on the mutual fund side. Most of the assets that we will be bringing on board, though, will either be equity or debt. Simpler structures to start off with, and then we'll probably move to hybrid structures at a later stage.
There's a question about the Bahamas license, and that Julian mentioned it might be approved within the next 2 weeks. I can answer this one. I think the reason why he said it is because of when we work with the regulators, they tend to give us hope, I guess, that yeah, it's really close, it's really close. But based on what I've heard and seeing what the guys have been working on, it seems to be actually close based on the required paperwork and stuff we have to send in.
I think we were initially concerned that the issues with FTX would dramatically slow down everything. I think actually it's almost the reverse. The show must go on. FTX was a huge fraud. I don't think it was, and a complete abuse of power and fraud. So there was from our perspective in our investigations, there's nothing wrong with the regulations. I mean, if someone wants to completely break the law, they do it. There's billions and billions of financial fraud in America every year. People maybe forget that. It's insane, the volume of financial fraud. They've got some of the strictest rules in the world. So that aside, Bahamas still wants to be a leading digital asset jurisdiction. They are actually talking about bringing out the first lending, staking, and borrowing regulations, and we're dedicated to seeing that through. And so, yeah, I think ultimately, regulators will never give you a date. They have their own things going on behind there. You can't really force them to do anything. But I everything that I've been through before on two other licenses is extremely positive. And again, we've seen before. We will let everybody know as soon as we get the good news. We have zero doubt there's going to be any issues, and everyone's just got to stay tuned. We were told it would be 30 days, 18 months ago. So that's kind of what we've been dealing with. But I know nobody else needs to matter about that. We'll get in touch as soon as we know.
So why is it beneficial to have a tradable security token on a secondary exchange?
Well, I mean, if you did what most token issuance companies did for the last couple of years, you would essentially be issuing a share or a token to yourself or to the investors without any possibility of doing anything else with it, which actually makes it worse than a private asset investment in a bank, where you could still possibly trade it with someone else within the bank if there is liquidity. But just having a token issuance without a secondary trading venue defeats the whole purpose of tokenizing in the first place, I feel. The whole idea of blockchain was actually to democratize the whole financial industry and to give the power back to the people and to allow everyone to sort of buy fractions of all these assets and have them tradable across different jurisdictions. I mean, if you don't have a secondary trading venue, then it's really just creating another wrapper for your token. It doesn't need to be on blockchain, right?
Yeah, definitely. And then to the last question I have, at least, regarding CT1, do you have any insights on the risks of investing in it?
I think for that question, let's go get the Curo guys to come on and do an AMA with us.
Yeah, I agree. That sounds good.
Thanks everyone for joining. I'll leave Aaron to wrap up the final questions, and Shara, thanks for hosting, and we'll speak to everyone soon. Have a good night.